Hey, beautiful people, welcome to episode 142 of Credit 101. In this episode, we're going to talk about how to easily stop those collection calls and letters, which is one simple letter. Now, I have this letter available on my website, so let me actually show you what the letter looks like so that you guys can see that it is very simple. This is something that you guys can definitely fill out, but this letter is available for free on my website. And all you have to do is just mail this in certified. So if you go to Rickita.com, you'll be able to get the letter here, if you can see. Now, usually it's an area like right here. I don't know why it's not showing up on my, oh, here it goes. It's just late, I guess. I was confused a little bit, but here it is right here. Free dispute letters and credit card list. This is what you guys want to look for. Just click right here. It'll be emailed to you instantly. Okay. And I'll teach you guys how to get your credit score to go up 60 points in 60 days also. So definitely just click there to be able to get that letter. Now, let me talk about this letter. This letter is basically a debt validation letter. If you guys are getting like collection calls, or if you guys are getting collection letters, or if an account is on your credit reports, you can send this letter certified to the company. So if it's Midland, if it's LVNB funding, whatever company it is, you can actually mail this letter directly to that company. I suggest that you send it out certified. Once you do that, they have to show debt validation, but then also in the letter, I say, and that you guys are basically on saying too, if you mail it, don't call me, they can email you now. Don't call me. Don't communicate with me at all, other than let me know if you're going to do any further action. In terms of, sometimes if you guys are inside the statute of limitations, which means this collection company can technically sue you, because collection companies have a certain amount of time to sue you, a certain amount of years to sue you, depending on what state you're in. So just Google statute of limitations. And actually, just in case you guys need like the spelling or something, my next video, I have like this right here. This is for the next video, but you guys can use it too. Look up statute of limitations for your state. Now, let me give you an example. When I had Midland contacted me, they put right on their notice to me that we cannot sue you. They put that right on a notice, which means that they knew that they were outside the statute of limitations. They were just trying to get money from me. They were trying to scare me into paying for it, and I wasn't going to be scared into paying for it. But if it's outside the statute of limitations, they can't really sue you. They'll be perfect for you. Now, sometimes when you send out letters like this, be warned that some companies may want to sue you. Let's just be honest. You just have to do a lot of research and see if this is an account that if this is a company that like to follow our lawsuits. Some companies just like to send a lot of notices, and eventually they'll get people to pay. But just definitely look into this. Now, again, let's go ahead and actually look at the letter, so I can show you guys like what you need to fill out. And this is actually in a full package. So it's actually more than just this letter in the package. Like if you go up, this is from like a previous live video where I showed you guys the actual dispute letters to the credit bureaus too. So definitely you guys can mail these letters out to the credit bureaus. You got inquiry removal letter in here too. So this would be perfect. But you're going to put your information here. And if you want to, I suggest, especially if you got like a lot of negative accounts, like when I used to do in-person events, I used to actually print this out, because you can just print this out and then just hand write it in, like just write it in. But put your name, your address here, put the date, dear, whatever company it is. Did they send you a notice, or did they respond to a listing? Like, or you guys can cross these both out, honestly, or just make another section. You called me, and then put whatever date like you called me 5/5 of 2024. You know, you can just put that, but just try to bold that so that they can make sure that they see it. Okay. With whatever you want to put right there. And then this information you're going to leave the same. And then your name is going to go here. Please read this before you send it out. Know exactly what you're sending out. This right here is when I said, hey, I want you to stop, telephone calls to my home or my place of employment. Anything will be considered harassment, like stop all type of attempts to contact me, basically. And you can add anything extra here if you want to. All future communication must be done in writing and sent to the address noted in this letter. Now, when I sent out a lot of these letters to companies, and you, like, say if you get a letter in the mail and they're saying, hey, we got a new debt for you, you got 30 days to respond. If you send out this letter a lot of times will just make a company just go away completely too, in terms of they'll try to sell the debt to a new company and you don't have to worry about this company anymore. And that's why it says things like all further communication must be in writing, like that, you know. So definitely fill that out, and then you can give this to them too. Please provide all this information, and then attach all of print this out for them too, so that they can fill this out and send it to you. A lot of companies will not do that. They'll just be scared and they'll go away. I had that happen a lot, where they were just scared and they just went away. But to me, a lot of times that is the goal. Like, just leave me alone until we get outside the statute of limitations. And you have to learn the statute of limitations, because some states is 6 years, some 10 years, 3 years. You just have to learn what your state is. But I'll definitely see you guys in the next video. Bye-bye. Hey, beautiful people. Welcome to episode 143 of Credit 101. In this episode, we're going to talk about what you guys should do if your collection actually turned into a lawsuit. This is a quick video. This is not going to be a very, very detailed video. I suggest you get hints on what to do from this video and actually do a lot more research. And just make sure, above all, you make sure that you respond to your lawsuit. Like, you will automatically lose your case, you guys, if you do not file an answer, if you do not show up. So above all, like, I don't care anything, just show up, okay? And just make sure you don't ignore it. It's not going to go away. If you guys need further help with this, make sure you guys seek an attorney or a lawyer that can actually help you with this full process. They can go to court with you. They can even probably give you a few suggestions on what to do, what not to do. And with a lot of the lawsuits out there, sometimes these different companies would actually file a lawsuit outside the statute of limitations, meaning that they cannot do that. So companies have a certain amount of years to actually file a lawsuit. So look into the statute of limitations to see how long they have to actually sue you. And when you guys go to court, or even in your answer, ask for a credit contract. You want to be able to see how they actually own this debt, and you don't just want to see like a statement. Ask for a credit contract and do a lot of research on what exactly these companies should show. Because I'm not an attorney, I don't want to give y'all legal advice. I'm just going off of a list. So let me just say that. Like, I don't know exactly what would be considered just legal advice, but just ask for a credit contract. When I went and sat in a lot of times, or even when I looked at certain cases, it was certain documents that they needed to have. So definitely, guys, do your research on this, and understand that judgments no longer show up on your credit report. So if you do not show up and you get a default judgment, or even if you show up and you still get a judgment, they're not going to show up in your credit reports. Only thing I would think about with judgments is garnishment. So watch out for a garnishment. I know, like in Wisconsin, if you get any type of state assistance, they cannot actually garnish you. So try to see if you guys have certain things like that in your state. Each state is different. So try to look in your state and see exactly what they have, because they may have certain rules in terms of garnishment, and when they cannot garnish you, the amounts that they can garnish you for. So definitely look into this. If you guys had any fraud charges on your case, ask your lawyer to look out for these fraud charges, because if you guys try to get this discharge in bankruptcy, it won't be able to get discharged. So this may be something that you guys definitely want to look out for. If you guys have any additional questions about this, you can definitely go to my website, rickita.com, and schedule a call, or my phone number is 833-RICKITA. Right now it's summertime when I'm actually recording this, and I'm not taking calls all summer unless you guys are inside of my memberships. You can get you can become a member. I'll be happy to talk to you guys. Or if you're already a member, let's talk about it. But definitely, if you have any questions, seek out a lawyer, because they're the one that's going to really be able to help you hands-on with this case and actually possibly give you some legal advice. Okay, I'll see you guys in the next video. Bye-bye. Hey, beautiful people. Welcome to episode 144 of Credit 101. In this episode, we're going to talk about the tax impact when you guys are getting your loans forgiven. So there's a few things I definitely want to talk about. If you guys ever have any questions, drop them down below, and understand I'm only talking personally. I'm only going to reply to those people that are subscribed. So make sure you guys are subscribed when you leave in comments. Okay. Now, the thing is, when you guys get your, say if you have like a foreclosure, say if it was a short sale, a deed in lieu of foreclosure, property repossession, default on a credit card bill, and then most settlements, basically or specifically when it is less than the contract amount, say if you're getting some type of settlement, you're paying less, then a lot of times you guys will receive a 1099-C form. And when you guys receive this form, you're going to need to file form 982 with the IRS, because they want you to count whatever the difference is. They want you to count that as income, whatever it is that they've forgiven for you guys. And this is especially if these companies are writing off this debt. Now, some mortgage forgiveness occurring between 2007 and 2025 will not include this, so you won't have to actually pay on it. And then two, it's up to $750,000. So double check the numbers. As time change, things change. Now, if you work for certain professions and you get like your student loans, like if you're a teacher and you do like a forgiveness, if you get those canceled, then you probably don't have to, most likely, you don't have to actually file this form and count that as income. It just depends on the profession. And I want you guys to look it up and see if maybe the profession that you have will count. Now, if the debt has been canceled, but it would have basically been a deductible if you had paid it, then you don't have to do the form. You won't actually get the 1099-C form. You will not have to actually pay taxes on that. And remember, when they count that as your income, you have to pay taxes on that, basically, on that money. So if it's $5,000, you have to count that as $5,000 in income. You have to pay taxes on it. Or also, too, if you guys had this debt discharged in bankruptcy, you guys do not have to pay any taxes on it. Now, this is usually for you settle with some of these companies that's out there. Say if you settle with Discover, they may go ahead and send you that form. But I suggest you guys, if you're concerned about actually having to pay taxes on it, if I were you guys, I would actually just do further research on whatever debt it is. And then also, you can also ask the company, whoever you're settling with, ask them exactly what they're going to do with that debt, so you can know what's going to happen. Now, usually they have to report at the end of the year, so you probably not going to get a form a lot of times until the end of the year. Okay. Now, hopefully this video was helpful. If you guys have any questions, definitely let me know. Other video. So on this video, I want to talk to you guys about debt relief services that I want you guys to avoid. A lot of times when people have debt, they want to go to a company that say that they're going to help them in terms of paying off these debts. And if you guys see these different things I'm going to show you on the screen shortly, or if you guys see that maybe this may not work, maybe you need to not go with that company. And then in the next episode, I'm going to talk about like which type of companies, such as sometimes people will go to, like, for debt settlement, they'll go to like payday loan stores, or they'll take out personal loans, but the personal loans have horrible interest rates, things like that. We're going to talk about that in the next episode. But in this one, when you guys want to know, which ones to avoid, I'm going to tell you some red flags now of things you need to avoid. So you need to avoid companies that set up long-term payment plans with your creditors. You need to avoid this. You also need to avoid companies that's going to negotiate some lump sum settlements. And we're going to talk more about this in the next episode as to why. But the only thing I want to tell you guys now is, for simple things like this, you can do it yourself, because you'll end up paying fees to these companies. And I think previously I did some negotiation letters in a previous episode. I did have those available. I need to find those and make it available on my website. I made it available for free also, so that you can settle with all your companies. It was free. You can mail them out. And that's why I said you can do it yourself. Like for those two, it's like I can do myself. Also, debt settlement companies that's going to ask for upfront fees. You don't even know sometimes how this stuff is going to work. So if you see the upfront fees, you need to watch out. Also, debt consolidation loans with high interest rates. So another reason why I really don't like this is the main thing. A lot of times when you have certain debts, you're not being charged interest. So say if that you owe $300 as an example for a debt. If you owe $300 for a debt, they're not charging you interest by the day, by the month, by the year. So if you owe $300 today, you're going to owe again that same $300 in 2 years or a year. So a lot of people will lump a whole bunch of those together. Oh, I got $1,000 one that's like that, $1,500, $2,000, $300. They'll put all of those together and then they'll get a high interest loan. But that's not smart, because think about it like this: you're not being charged interest. You'll be better off just saving your money and just negotiating and paying out as you get the money. You'll be better off doing that than to do high interest rate loans. Also, payday loan companies, we talked about that for sure. For-profit debt management plans, and also any type of debt elimination scams. Like, just avoid all of these different things. Now, in the next episode, we're going to go more into the difference between debt settlement and debt negotiation. We're going to go into that because that's going to be a key thing that you guys definitely need to learn if you guys want to figure out some debt relief. And definitely make sure you guys check out my blog too, Rickita.com. I always have a blog that's tied to this. You guys can read and get even more information, just in case this is not detailed enough. I usually make these videos to spark something in your mind, and if it's what's going on with you, you know to continue to look further at the blog and get the complete list of information on what it is. And if the video is not what you need, you thought it was, then it's like, okay, good, go about your business and you have a great day. But hopefully that this is helpful. We need to do episode 146 next. Hey, beautiful people, it's Rickita, and I'm back with another video. So this is going to be episode 146 of Credit 101, and we're going to talk about debt negotiation versus settlement. Now, I want to let you guys know that both options basically is going to aim to reduce your debt burden. They involve different approaches and also potential impacts on your credit. That's really the biggest thing, because I want to still, like, even if I'm paying off debt, or for you guys, even when you guys are paying off debt, I still want you guys to preserve your credit if you can, because that is very, very important. And building your credit back up can be very, very hard if you're basically getting late payments and things like that. So the first thing is debt negotiation. Let's talk about that. So the main thing is they want to, a lot of times, adjust your terms. So they may negotiate like lower interest rates for you, extended repayment plans, or waive fees. In a previous episode, I don't know where those documents is at. Maybe I'll find the link for that one, but I put together documents where you guys can do this on your own. It was free. I was like a Google Doc that I made. You guys can download all the negotiation letters. Hopefully I'll find that link and put it down below in the description or in the comments, because it's going to be very, very helpful to you guys, because you can do this stuff yourself. And the goal is to remain current on your payments and avoid defaults and delinquencies. You don't want to mess up your credit moving forward. You want to just negotiate, hey, can you waive some fees for me? Can you extend my payment periods? You know, things like this. Can we lower the interest rate? You want to keep all your accounts good. You don't want to mess up your account. Now, so the successful negotiations can improve your payment history, because you're not having late payments, you guys, which is good, and can improve your credit score over time also. Now, on the other hand, you have debt settlement. Now, with debt settlement, you can negotiate to pay a portion of your debt in a single lump sum, which the creditor agrees to accept as full payment. And that's usually what debt settlement is. And in the last episode, I told you all, for debt settlement, do not get high interest rate loans. Figure out what the company want as a settlement, and during the time you want to settle your debt, just put a certain amount of money into a separate account and keep filling it up. And then as it fills up, you can go ahead and settle with the next company, whoever it is, you can already call them ahead of time too and set up some type of lump sum settlement. But usually when you set it up, they're gonna want that money right away. Like usually, like when I have settled debt in the past, they want the money right away. So say if you say, oh, I got a $2,000 debt, I'm gonna settle it for $600. They're like, okay, let's process payment today. Like, you know what I mean? Not know, oh, can I do this in 3 months, 4 months, a year? Usually they want their money right away. So keep that in mind. But if you do hear from them and they say, oh, we can do it for this, at least you can know what type of terms they'll be on, or, you know, how do they feel about certain things. If they settle with you saying $600 before, why won't they do it again, or maybe go up just a little bit? You know, kind of where they're at with their number, which is good. Now, often debts need to be in default. Usually, if you owe a credit card and you 60 days past due, a lot of times, like most times, I don't know, me personally, I never heard of anybody having a debt like that. And they're like, you know what, I'm just going to settle it out. Like, for instance, you got $2,000 debt and we pay $600 on it. Usually it needs to be in default. It's already charged off. And a lot of times too, it already went to the collection company, but that's not good for your credit, which is not good. So debt settlement can significantly impact your credit negatively, as it indicates you do not pay the full amount owed and you have a lot of late payments. Okay, so understand that if you have some time on your hands, which we all got time on our hands, and if you really have a lot of debt and it's really suffocating you, you all should get the debt settlement letters that I have and mail them out. Figure out which ones I have. I have a whole video on it. I just have to make sure I find it for you all too, so you can know which letter to use, how to fill it out. I made a whole video about that, but hopefully I'll find that video. I'll tag it because that's going to be very, very helpful to you all. And I'll see you guys in the next episode where we're going to go further into. Hey, welcome back to episode 147 of Credit 101. In this episode, we're going to talk about the FTC regulations for debt relief services. So for those people that's thinking about doing some type of debt relief service, please check this out and see if you guys have like different regulations like in like your state, because you guys can have special ones for your state too. So see if they have any special like regulations before you consider a company. And then I think in the last episodes we talked about, you know, how to, you know, find a company, what to look for, what not to get, you know. So the first thing is that they're prohibited for charging fees before they settle or actually reduce your debt. Now, I told you all before that I had a free, it's like a Google Doc that had like 10 different, or I think even 15 different letters that you can use to reduce your own debt, and you know, and settles your own debt. So definitely check that out. But they are prohibited for charging upfront fees. And that Google Doc was totally free. So you really don't have to go with these companies. But if you decide to go with one, just know they cannot charge you any upfront fees. So payment is only required once the service has been successfully negotiated at a reduction in your debt. Once they do that, then it can charge you a fee for it. Now, the next thing is that they must provide specific information before you sign up for their services. So they got basically some disclosures they need to let you know, like how long it will take to see results, the total cost of the service, any potential negative consequences of using the service, such as sometimes your credit reporting will get messed up. So that's something that they need to let you know, like, hey, since you're not paying on this account anymore, you have a chance of them actually reporting late payments, which can drop your credit score, you know, just letting you know different things like that. Now, another regulation is that if a debt relief company requires you to set aside funds for settlement offers, these funds must be held in a dedicated account. So they must be maintained at a financial institution. This is the part that I like, that you guys, these accounts must be owned by you, which allows you to withdraw the funds at any time. Because I just thought that these companies, a lot of times they just take the money and then they settle it. I don't know if the money is available that you could just take it at any time too, to use it for whatever, say if you don't want to settle anymore. But it must be free from any fees too, for the maintenance of the account by the debt relief company. So they're prohibited for making any false or any type of claims about their service that's not true, that they can't back up, basically. And they cannot mislead you about their success rate, falsely claim affiliation with government programs, and make guarantees about the amount of debt reduction or time it will take. They cannot guarantee, like, I guarantee this is going to be done in 5 months. They cannot guarantee it. They can always say, well, it could possibly take this long, but they cannot necessarily guarantee it. But this is basically the FTC requirement. So if you guys are thinking about getting any type of debt relief, then definitely check this out. And then I'm going to talk about debt management plans and how they operate in the next episode. So definitely stick around.